Calm River strategy. How often do we look for something complex that we think may be the long-awaited grail and neglect simple but effective methods? The Calm River strategy is based on two moving averages, which is much easier. However, indicators are used unconventionally and show good results. Goals are small, but they are correct and work out with a high probability. Features of the Calm River strategy. Most systems based on moving averages use their intersection as a signal to enter a trade. This signal is delayed and often turns out to be false. The Calm River strategy has its own special feature. It uses indicators in a slightly different way. This highlight of the trading strategy allows you to use signals from indicators almost without delay. Our moving averages serve only as guides, and the main signal is provided by the price, which cannot be delayed. However, the Calm River strategy only works in a trending market. Both movings should be clearly aligned in the same direction, be as parallel as possible, have smooth shapes and resemble the riverbed, hence the name. That is, in the Calm River strategy, moving averages are used as indicators of calmness, with which the price should interact in a special way. The entry signal for us will be a price rebound from the moving average, provided that the latter retains its trend position. Description of the Calm River strategy. The advantage of the Calm River strategy is that you can trade it on all currency pairs without exception, on majors, crosses, as well as stocks and other trading instruments. The strategy is traded intraday, with the optimal time frame being M5. This does not mean that you can't use the principles of the system on other time frames. You can independently test the operation of the Calm River at higher intervals to get more profit. Try to optimize your moving averages to get the best result. All this can and should be done. In this case, the strategy was tested on the M5 interval during the European and American sessions. You can use the finished result and apply the strategy according to the suggested rules. The figure below shows examples of the trend and flat market on the M5 TF of the euro-dollar currency pair. Calm River strategy. Trading using the Calm River strategy. We use exponential moving averages with periods of 20 and 50. We are waiting for the price and moving averages to move parallel to each other in the same direction. At the same time, for an uptrend line, the price should be higher than the moving averages, and the 50 MA should be lower than the 20 MA. For a downtrend, the opposite is true. The price is lower, MI20 is above it, and MI50 is above it. This is how we determine the presence of a trend and wait for the desired signal. It occurs on a pullback, when the price enters the channel of the river and is between two moving averages. It is important that the price does not float in the river for a long time. The strategy allows no more than 3 Japanese candlesticks with a close between moving averages. If there are more closes and the price is stuck inside, then we skip the entry, even if everything suggests that the price will go further along the trend. The figure below shows just such a case. Calm River Forex strategy. In the green rectangle, the price stuck and showed 5 closes inside and above the moving average, so we just skip all this small flat. But if there is a surge in volatility immediately after the green sector, we can enter as soon as the descending candle has crossed both moving averages in the opposite direction. The 3-closure rule is formally observed here. We would have entered at the close of the 4th candle. Money management and transaction management. When entering a trade using the Calm River trading system, we open 2 orders with the same lot volume. The latter is calculated taking into account the allowable losses of 1–2% per trade. We place a restrictive stop loss for the extreme that is located behind or between the moving averages. Take profit is set only for 1 order and it is equal to the size of the stop loss. We set the second order to break even as soon as possible, then move the stop over the next extremes as they appear until the reverse close. Examples of transactions based on the strategy. The figure below shows an example of entering a trade using the Calm River strategy to buy on the euro-dollar pair. River strategy. We are waiting for a river of 2 moving averages to appear, pointing upwards. Then the price rolls back and 1 candle enters the channel, but does not close in it. The next white candle closed outside the moving averages, which means that we can open 2 buy orders at the price of 1.1698 after it closes. Stop loss is placed below the extreme at the price of 1.1692, 1 point lower. Thus, our take profit will be equal to 6 points plus the spread. That is 8–9 points for most brokers. 1 order is closed at top, and we could earn more than 30 pips on the second one. In the future, the price would give us another opportunity to make a small profit. Calm River is a simple and reliable scalping strategy that gives several signals per day on all instruments where there is a trend. There are also unprofitable trades in it, but one good trend will make it possible to cover all the losses that occurred earlier.